Joining me now again is Chris Versace, the CIO at Tematica Research. Chris, thank you for your patience. So glad we got you back.
Always love speaking with you guys. Happy to persevere through some little tech mishaps.
Yes, we made it happen. So what storylines are you following most closely today during this session, which is now about 15 minutes in session?
So, if we were speaking about, 20 minutes ago, I was going to say, oh, let's take a look at the GDP numbers and that implication. But, in the last, several minutes or so, we've seen ServiceNow formally announce an acquisition that's going to move it a little more into the cybersecurity space. And I think back to what we heard yesterday from Google, flexing its balance sheet to shore up its power needs, which of course speaks to the conversation that you were just having. And I think that the market is going to continue to trend higher during the Santa Claus rally. We're going to continue to see a vibrant IPO market in 2026. And I suspect, too, that the M&A I just referred to is going to continue as we move into 2026. So I think even though we have a quiet set of days here, the outlook for 2026 is going to remain rather favorable.
And you touched, Chris, on that GDP data. Q3 GDP data was released earlier today. What are your takeaways from that report?
Well, I mean, I think on the one hand, it showed that the economy was clearly stronger than people had expected. At the same time, inflation was persistent. But I would also say that, that data reflects, July, August, and September. Here we are in December, several months later. We also had the government shutdown. So I think to some extent, while it's, constructive on the one hand, it's also rather stale. So I personally would not put a lot of weight into that data. It does kind of raise some questions about what the Fed may do next after having cut, interest rates 3 times this year, 3 times last year. But at the same time, I think we're going to have to continue to watch, the labor market very closely as we move into 2026. We're going to have to continue to watch, the CPI data, the PPI data. And as we think about that, right when we get back after, the new year, the start of the new year, we're going to start getting data from ISM, S&P Global. That's going to tell us what December looks like. And I think that is going to be rather illuminating for what we see about Fed policy going forward.
All right, and you touched on it earlier, the so-called Santa Claus rally, the final 5 sessions of the current trading year and first 2 sessions of the following year begins tomorrow. Do you think we're going to rally, Chris?
So my inclination is that we will. Whether or not we get the average rally size of around 1.3%, we'll see. There's some indications that we might have seen a little bit of pull forward this year. And I am a little more optimistic, especially since that, the last 2 years we did not see a Santa Claus rally. I think the odds of that happening 3 years in a row are pretty low. So yeah, I'm feeling pretty optimistic. I'm hoping for a couple presents in my bag under my tree this year. Yeah.
All right. And how are you advising clients when it comes to navigating the current state of the market into 2026?
So, around this time of year, a lot of folks like to say, oh, this is my S&P 500 target, or this is where I see stocks closing, blah, 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 in the next 12 months. And I find those extremely difficult. There's a lot of things that can happen during the year. We saw that play out this year, especially with the tariffs. If you said to folks back in, April, May, hey, the market's going to be up, 15, 16% this year, I think a lot of people would have been scratching their heads. So what we're going to focus in on, and this is my suggestion, is focus where, you see structural change unfolding. You continue to focus on companies with multi-year tailwinds and are poised to deliver faster earnings growth than the S&P 500. Names that we like, that we've picked up very recently. We've used the pullback in Broadcom to pick up some shares for the Street Pro portfolio. We also picked up some shares of Welltower, WELL. We really like the coming conflict, if you will, between the aging population or the silver tsunami and the expected shortage in senior housing, not just, in 2026, but really over the next few years. Those are the types of things that I would look for.
And I think it's fair to say that AI dominated the headlines and markets in 2025. But what developments do you think could dominate market activity early into the new year?
Well, you had a guest on earlier, Gary Shapiro of CES 2026, and that event, it really happens during the first week of trading, the first full week of trading, I should say, for 2026 before the December quarter earnings season. So I think that event is going to be a very big catalyst. Gary hit a number of the topics, especially AI. I think as we start the year, that's going to come back into focus. I'll be continuing to watch AI adoption in the enterprise and with the consumer. Remember, we have Apple bringing out an AI-enabled Siri later in the year, and I think AI is going to, kind of continue to dominate in 2026. But I also think, though, that subject to what we see on the employment front, what we see on the inflation front, if we get the sense that the Fed might have to do a little bit more in terms of rate cutting next year, we could see some more interest rate sensitive areas come back into vogue. Call it housing, even REITs.
All right. Thank you, Chris Versace, CIO at Tematica Research, and love that festive holiday jacket.
Thank you very much. Happy holidays. Merry Christmas to you and all your viewers.
Yes, happy holidays.